Good morning, everybody. It's Monday, December 30th, 5:25 a.m. Central Time. Grain markets are higher this morning. March corn futures up 1.5 at 455.5. March soybeans up 3 3/4 at 993.5. March Chicago wheat up 1/4 cent at 546 3/4. March Kansas City wheat up 1 1/4 at 555 3/4. March spring wheat up 0.5 cent at 595 3/4. We had some good demand news last week. Why don't we start off with that?
So, U.S. corn export sales increased sharply last week. Net corn sales surpassed expectations at 67 million bushels. The print was up 46% compared to the previous week and up 39% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales fell to a marketing year low and were also below pre-report expectations at 36 million bushels. The print was down 31% from the previous week and down 47% from the prior 4-week average. China was the largest buyer for the week. Net wheat sales surpassed expectations at 23 million bushels. The print was up 34% from the previous week and up 64% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
2 out of the 3 were very good. Corn sales were very good. Wheat sales were very good. And soybean sales backing off. And this is pretty normal stuff to see soybeans back off. Brazil has a competitive advantage now when it comes to soybeans shipped to China. They're cheaper than we are. There's a currency issue. There's also maybe the bigger idea that just they're going to have this monster crop. So we're going to start to see soybean sales drop off. Corn sales were phenomenal, 1.7 million metric tons. The idea among a lot of analysts still, despite this strong pace, is that the export sales program is front loaded because 1, prices are good. 2, Trump is coming into office and there's going to be tariffs. USDA is not going with that narrative, though, because USDA a couple weeks ago increased its estimate for U.S. Corn demand via export sales. And for the moment, I mean, these sales continue. So it looks like USDA is going to be a little bit closer to reality. So we are on track very much at this point to meet or perhaps even exceed USDA's upwardly revised estimate. Soybeans, I think USDA is pretty fair here with its estimate. Sales really improved the last couple of months, and they should start to drop off now. Wheat sales are about average-ish, but that was a good print. So some good, really good demand news for corn continues to support the market there.
U.S. ethanol production was strong again last week. Weekly output of 1.11 million barrels per day was up marginally on the week and up 3.4% compared to the same week last year. Ethanol stocks were pegged at 23.07 million barrels. The print was up 2% compared to the previous week and up 1% versus the same week last year. Implied gasoline demand was up 1% compared to the previous week and up 3% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 3.5% compared to the same period last year.
Ethanol production remains excellent. USDA, as with export sales, increased its demand projection for corn via ethanol. And even with the upwardly revised projection, USDA is only projecting that corn demand via ethanol will increase by 0.4% year over year, while the production pace is running like 4% above last year's pace. I don't know that 4% is sustainable, but to sustain something better than USDA's projection may be very possible. So if this sort of pace continues, you got to think to yourself, USDA may have to come up again with the corn demand via ethanol number, which would further tighten the balance sheet. So I've got nothing but good things to say about corn demand. Soybean demand has improved, but I don't know that there's a reason for USDA to adjust a whole lot there. Corn demand is really the big bright spot right now.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Pete Meyer was on last week. Dangerous precedent as it relates to direct payments. Pete gave his very matter-of-fact thoughts about the direct payments. Also got into a lot of biofuel stuff, 45Z, a lot of policy matters as it relates to the markets. I did a grain marketing review last week. When I do a grain marketing review, I talk about and discuss every cash grain sale that I've recommended for corn, for soybeans, for wheat, for old crop, for new crop. They're all broken down by crop year, percentage. We spit out weighted averages. I talk about the game plan moving forward. I don't even mention options or futures in these videos. This is all cash grain stuff. So if you guys are looking for a simpler approach, perhaps, to your grain marketing, maybe this would be something to take a look at. Paul Neiffer was on last week and talked about the emergency relief program and how this could result and will result in even more money for farmers. Some farmers are going to see ERP payments on top of the direct payments. So there's going to be a lot more money in farm country. He made a free tool available to calculate the situation on your farm. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. It takes you like 30 seconds to sign up on your phone. We do Apple Pay, Google Pay, Cash App, credit card. You'll get our morning email at 5 a.m. Central Time. All the videos are a piece of cake to play. You just click a button and it plays. There's no login instructions. You can do all that on your phone. Check that deal out this morning, guys.
The Buenos Aires Grains Exchange altered its outlook for Argentina's corn and soybean acres. Corn acres are projected to reach 16.3 million this season, nearly 5% higher than the exchange's previous estimate. The new estimate was described as a correction from the prior forecast. At the same time, the exchange lowered its soybean acreage estimate by 1.1% to roughly 45.5 million acres. The drop in soybean acres is due to farmers switching to more profitable crops. Argentine farmers completed planting about 85% of this season's soybean crop and around 81% of the corn crop.
Argentina's forecast, and I left out one map here, but over the next 14 days, Argentina is going to see less than half of its normal precipitation. And then it kind of opens up during this 15 to 28 day period. They're going to be back to normal rainfall, but there's still some pockets here that are going to be on the dry side. Even when you go out through Jan 15th, like the scattered rain situation kind of remains the same, the way that I'm looking at it. Meal is trading higher again this morning, and that's kind of your tell whether or not we're trading Argentina. And it is higher this morning. It reversed lower last week. So I think we've got a little bit of an Argentina weather story, and we may have a little bit of a Brazil weather story as well. Let's jump to that.
So USDA's Brazil Attaché office increased its estimate for the country's soybean crop. Citing timely planting, the office is forecasting this year's crop to reach 116.1 million acres. The estimate is 2.3% higher than last season and consistent with the 5-year average. The office also boosted its soybean production estimate to 165 million metric tons. The increase was due to better than average early rainfall and a larger planted area. The USDA is forecasting the crop at 169 million metric tons. CONAB, Brazil's version of the USDA, most recently pegged the crop at 166.2 million metric tons.
Yeah, everybody's coming up with crop estimates, although I am seeing drier weather in southern portions of Brazilian soybean country. You look at these southern areas, and they're going to see less than half of their normal rainfall. Some areas worse than that over the next 2 weeks. And those southern areas, I mean, you're talking a third of the country soybean production that is a little bit dry. And then when you kind of zoom out, you take a look at, it's really this area from southern Brazil into Uruguay and then into Argentina that's going to be pretty darn dry for the next 2 weeks. So if somebody is buying soybeans or meal this morning because they're looking at this and saying, you know what, most of Brazil is pretty good, but you got a third that's not really good. And then you've got a lot of Argentina that doesn't look really good for the next couple of weeks. Maybe that's reason enough if you're a fund trader to come in and maybe at least cover some shorts in the soybean market, maybe cover some shorts in the meal market. I wouldn't be surprised if that's kind of what was happening here this morning.
The condition of Russia's winter wheat crops is forecast to deteriorate in January. Warmer than average temperatures and excess precipitation in Russia's central and Volga regions will cause sprouts to continue to grow. Crop sprouts are weakened due to ongoing winter growth, resulting in needless energy and sugar consumption. Recent reports have indicated that more than 37% of Russia's winter crops are in poor condition or have yet to sprout. Crop conditions in Russia's southern region are anticipated to be average. However, soil moisture in the area is forecast to remain low.
There are some issues with above normal temperatures in Russian winter wheat country. So farmers in Russia plant their winter wheat crop in September, October. The crop then goes into dormancy. They harvest in July, August. It's pretty similar to our pattern here in the United States. Winter wheat in Russia is 3/4 of the country's total wheat output, so it's a big deal. Temperatures are going to be in the 40s and even in the 50s on and off over the next couple of weeks in some of these winter wheat areas. So I think there's concern of early emergence and then damage. Does the market care about this? No, not at all the way that it seems. Wheat futures are just sideways, 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 despite the rally and some of the strength that we've seen in the corn market in particular. So you would think that maybe this would be enough to get the wheat market going, and it just really has not been.
The US dollar is on track to achieve its strongest annual gain in nearly a decade. The Bloomberg Spot Index is up more than 7% this year, marking its best performance since 2015. The strength of the dollar is mainly due to the robust economy. The strong economy has reduced expectations that the Fed will continue to cut interest rates. Furthermore, President-elect Donald Trump's threats to impose tariffs have boosted expectations for the dollar's performance. Speculative traders are optimistic about the dollar, as they currently hold about $28.2 billion in contracts, betting it will increase in value.
Now, when they say betting that it will increase in value, what they mean is that they're betting that it's going to increase in value relative to other currencies, not that the buying power is going to increase, just to be very clear about that. The US dollar index, as it is most commonly measured, is most heavily weighted versus the euro, then the yen, then the British pound, then the Canadian dollar, then the Swedish krona, then the Swiss franc. It's kind of outdated and antiquated. They need to include some of our other trading partners, like the Chinese currency should probably be included here, but it's not. For us as grain and oilseed market people, the dollar Brazil relationship versus the Brazilian real is very important. And last week, the dollar made a new record high versus the Brazilian real, and we're very close to a record high again this morning. This has been a big problem for the soybean market. It's been a very good thing for Brazilian soybean exporters, helps them out, and U.S. exporters. It makes us less competitive versus Brazil, essentially. So this currency pair is problematic. I believe the U.S. dollar is up like 28 or 29% versus the real over the last year or year to date, rather. So same thing. But yeah, this is just one of the soybean market's problems. What did cattle do last week?
Cattle futures extended gains on Friday. Live cattle were 45 cents to 85 cents higher. Feeders were 45 cents to $2.07 higher. Cash cattle trade was light last week. However, prices were higher compared to the previous week. In the Southern Plains, cattle were $1 to $2 higher at $1.92 to $1.93. Down in Kansas, cattle were a buck higher at $1.92. And then over in the Western Corn Belt, cattle were steady to $1 higher at $1.96. Box beef continued its upward trend on Friday. Choice ended the day at $322.38. That was up a buck 99. Select was $2.36 higher at $291.13.
Outside markets fairly quiet. U.S. dollars off a little bit. Stocks are a little bit lower. Bonds up just a little bit. Precious metals mixed. Crude oil is unchanged at 70.18 in the March WTI contract. Have a great day, guys. We'll be back on Tuesday